I
Is
think
this
so.
going to be the tech bounce back?
I think it will. Look, I know they have not been leaders in some time, but when you come through this forest fire and everything is upside down, money doesn't jump into small caps or international or some of those areas. It goes to the most liquid names, the names that we know have good earnings, have good balance sheets, that are buying back stock. That brings us to those stocks. NVIDIA, Microsoft, and Apple have quite a bit of market cap with the Nasdaq and the S&P 500. So I think when people start like kind of picking at things, they want to pick at things that they know the company, they know that the stock's taking a hit, but they also know there's a lot of liquidity. So for some reason, big institutions jump in, and the market doesn't follow through. They know there's a bid there, they could jump out. That's not true with small cap and some other type of investments, coming out of this malaise.
Understood. And do you like all three of them equally? Apple, Microsoft, and NVIDIA?
It's close. I would say I like NVIDIA the best. The forward-looking PE, again, we don't use PEs, that's rear view mirror looking, but the forward PE for NVIDIA is 25. Historically, it's like 35 to 40, meaning that the earnings are going up and the stock price is going down. So that's kind of the pick of the litter. Apple today is having a very difficult day, obviously. Again, you have 2.4 billion users. You can really monetize 2.4 billion devices, Nicole, right? And then finally, Microsoft, you have all those verticals. You have gaming, you have cloud, you have Windows this, Windows that, Windows Teams. So, those are the three horses that people feel most comfortable to, where money, I think, will go back into first. Eventually, we'll go up the food chain of risk, but to start with, coming through this really difficult time, I think those companies, especially again, 2.4 billion users of Apple and 1.2 billion customers of Microsoft, I think that's where money's going to start going first.